Good morning, everybody, and this is your DAX setups for today. So the triangle we were looking at yesterday, you can see how we just flirted with it, and then this morning we're breaking through. This is after hours Asian session trading, so I'm going to take that with a big pinch of salt because we do have potential for some diversions forming here as well. And just looking at what's happening on the US markets, I don't trust this at all. Looking at the oscillators, don't trust it either. If I come to the daily, definitely don't trust it when my oscillators look like that, even though we are in an uptrend. And if I come to the weekly, I most definitely don't trust that with that little divergence between those two swing highs there. So we are flirting with all-time tops, or all-time highs, should I rather say. So it is typical of the price action as we're trying to bust through the all-time highs and gain new footing. But with the oscillators like they are, I'm really skeptical about what we're seeing right now. So dropping down to the 3-hour, you can see again barbed wire in this triangle, and you can see the break. There's the break and the retest, and then a 1 bar up, and then you've sort of got this after hours bar that's going up. Have a look at the oscillators. They are indicating that we are completely overbought. So you would be foolish to think that this is going to continue to the moon. And just looking left, this tails the upside, tails the downside, big confusion. You probably find that we're looking for a top somewhere over here at the moment. I don't see, and you can see the trap it's forming as well, but it's a big inverse head and shoulders, shoulder, head, shoulder. So there's a massive trap forming here where a lot of people, especially retail traders, are going to be looking at this and going, well, there's a head and shoulders. We're looking to get into this. We've had a diagonal trend break. This thing's going to the moon. We're in. And we're going to have a really wide stop loss below last week's low or even lower. Yeah, and that's typically how we start to lose money as the institutions trade against us. So anyway, let's get down to the 1 hour, and you'll see why I am completely negative about getting into this market. So this confusion of above and below the moving averages is still in play as far as I'm concerned. It's been in play most of last week, and we keep dipping below it. We dipped below it yesterday twice before the buyers came in. So there's a lot of stops that were triggered there because you would have people that were being short off this trend line and pretty much got going, but then that's where you had your stop triggers there. So I'm very reluctant to get involved in this. I think personally, I think this diagonal here you need to get rid of and focus on this one, but adjust it like that, because that is the first two touches of that trend line, and you can see we're below it and we keep testing it like this, and we're now starting to drift away from it. So we start dropping below the lows of yesterday, which is in this area of 16,158. I'm not going to put it exactly on these tails, but that is kind of the area I'd want to see a break below, and then you come back and retest one of these tails. That would get me looking for a trade in the opposite direction. But for now, the trend is up, and it's up until it's not. So when you're down on the lower time frames, you're looking for opportunities to buy, but have a look at this. Big up, big down, big up, big down, big up, big down. What's coming next? Big down. And there are a whole lot of gaps here. I think there's that gap there is also open. So this level here is very much in play. You've got all these gaps down here from Monday, and then you've got gaps down here from Friday. Yeah, this is not something I'm interested in, to be honest. This is way too choppy, as some people would call it. So yeah, I'm sitting on the sides, guys. The Feds are coming out tonight as well with interest rate hike, well, expected interest rate hike. So if they don't raise interest rate hikes, this thing is going to bullet. It's going to break out all the the resistance is hitting and we're going to have a quick squirt up. If interest rates do come out, it's probably just going to continue doing more of what it's doing, because we're expecting that, because we're also in the middle of earnings season. But if it comes out with a bigger than anticipated interest rate hike, then that may play into the hands of the bears and the thing may fall. So yeah, if you've got a coin, polish it up and toss it, and you might as well try and take heads or tails, heads long, tails short, because that's probably the only way that you're going to potentially get a trade in. And even then, you're going to have a 50-50 chance of winning. So for me, I'd prefer to keep my money in my pocket. Don't like losing money. And this has just losing money written all over it for me, because you're going to second guess the direction. And we've really got strong overhead resistance here, and all the oscillators indicating the same thing. So I'm very reluctant for a long. I prefer longs lower down, and that's what we will wait for. Anyway, hope it helps you, and we'll catch up with you tomorrow morning. Cheers for now.